So Bank of Canada announced that they are going to keep the rate at 4.5%. What does it mean for the Canadian housing as well as the economy and the loonie against US dollar? So in this video, we are going to talk about that. If you're new to my channel, my name is Yasin Nizami and I make these videos to educate my audience about the real estate market in Canada, particularly in the GTA, as well as some macroeconomic factors, some geopolitical situations, some investing strategies. So if you're interested in any of these topics, consider subscribe. And let's talk about today's news. So today's news is Bank of Canada has announced to keep the rates at the current level, which is 4.5% overnight rate, which means they are not going to continue the rate hiking process that they started last year. And the reason is the GDP data came out negative last week. So as per Stats Canada's latest GDP statistics, the economy is contracting and it came out less than the expected level from Bank of Canada. So that means the economic impact are now being seen that the rate hikes are kind of slowing down the economy. Now keep in mind that when the rate hike cycle started last year, it is typically taking 12 months to 18 months period in terms of affecting the economic growth. So there is a lag always there when the rate hikes started making its impact in the real economy. So we are now seeing that the economy is kind of taking this impact from the rate hikes that we saw started last year. Now, the other reason is as inflation is kind of trending down and Bank of Canada is keeping an eye on CPI, but one of the major component of CPI is shelter. And the shelter cost is directly related to interest payments. And interest payment is directly related to Bank of Canada's overnight rate. So while Bank of Canada is trying to fight inflation and trying to increase the interest rate, it is also increasing the mortgage cost, which is now going to impact the shelter component of CPI. So they wanted to control the inflation. So that means they have to play it in a balanced way that they don't overshoot the shelter cost too much, which will eventually trigger the CPI to go up again. So these two are the main reasons, in my opinion, they are trying to keep the rates at this level. They can assess the situation, assess the data as they will see the data coming in the next 1 or 2 quarters. So inflation is trending down, which is good news. But the bad news is the differential of interest rate between Canada and the US is going to expand. And yesterday we saw Federal Reserve Chairman Jerome Powell indicated that the rate hikes has to be more aggressive than previously anticipated, which means the delta between the Canadian overnight rate and the Federal Reserve funds rate is going to expand and may be reaching 1%, which means the Canadian dollar is going to take a lot of pressure in terms of setting its price against USD. So we are already seeing the Canadian dollar is kind of trending down. Today it tanked 0.3% already in the open market. So these are the things we have to carefully watch. And it doesn't really mean the housing market is going to take off from here. I'm seeing a lot of activity in the market and I'm seeing a lot of realtors are kind of pushing this narrative that, hey guys, this is the bottom now. And from here, the market has to go up. I don't buy this narrative, to be honest, because the only reason why the housing market is kind of showing some activity is we don't have enough inventory. When you don't have enough choices, whatever the products available in the market are going to be sold. Because if I'm the seller in the town, I don't have anybody competing with me, I will set my own price. So that's what is driving the activity in the housing market. It's not really the bottom yet, because it takes time for the real estate market to kind of adjust its progress as the rate hikes move forward. So that's it from me today, and let me know what you think. Let me know what you are trying to predict in terms of how the market will behave and how the economy will move up. One advantage is if the Canadian dollar is getting cheaper against USD, it will help Canadian exports to go up, especially oil prices. So that will help Alberta economy very well, but we'll see how this will play out. Until next time, take care.